Good evening and thank you for joining us on the program. I'm Temple Ashadio. Let's begin straight with a major earnings that was fired by GT Bank. It's a much expected half-year earnings of Guarantee Trust Bank, which has released yesterday, Friday, in the market. Gross earnings came in lower by some 2.1% year-on-year, so interest income declined by some 7.96% due to weaker income from both loans and customers' investment securities. And the 25.8% decline in interest expense partly cushions the impact of weaker interest income and resulted in net interest income falling marginally by 1.33% year-on-year. Given the reported income and growth in expenses, the bank's profit before tax rose by 5.61% year-on-year, while profit after tax settled 3.72% year-on-year. The Guarantee Trust Bank is not expected to go below the statutory limits for LDR at the deadline in September 2019, as the current LDR stands higher than 61%. Now let's do a little bit of the market review now. The exchange continued its bearish trend, declining some 1.40% week on week, with year-to-date performance more negative at 14.33% at this point. The all-share index closed the week at 26,925.29 points, with the market capitalization shedding some 185.9 billion naira. On the sectoral front, the market witnessed losses across all the major indices except for the telecom sector, which was positive this week again by some 2.13% week on week, thanks to MTN Nigeria. And the sectoral performances revealed losses on FBN Holdings, which declined by more than 7% this week. Stanbic IBTC shared about 13.39% week on week. Equatorial Trust, EcoBank Transnational Incorporated declined by some 17.24%. WAPCO, due to some profit taking, was down more than 6%, and Unilever more than 12%. Nestle yesterday muted some 10% due to the activity of some more foreign investors who are taking flights from the markets generally. Let's do a bit of the US side from the unlisted securities market. That was marginally down 0.04% for the week at 716.76, with market capitalization falling from 515.16 billion naira to 514.94 billion naira. For this week, the total volume was just 1.42 million, valued at some 65.77 million, and of course, transactions was put at 31 in total. We got 6 out of the 38 securities traded in the market this week, with, of course, CSCS and the Niger Delta Exploration Production Company as the key market leaders by volume and by value. And if we look at the fixed income space yesterday, in terms of bonds, we had a total number of 32 deals on the secondary side of the market, valued at some 19.18 billion naira. While for the treasury bill side of the market, total deals yesterday was put at 383. And of course valued at 209.11 billion naira. In recent time, we've seen investors moving out of the market in droves, but this week we saw the CBN returning some treasury bills and OMO auctions, which held during the week. The week, of course, had just 3 trading days given the Salah holiday that we had, and of course there's some 34.38 billion naira worth of bills were actually offered. But the secondary side of the market, average fixed income yields closed 54 basis points higher week on week to 13.66%, with expansions at both the short and the long ends of the curve. That's for both the bond and the treasury bill side of the market. But specifically for treasury bills, yields rose from 58 basis points week on week to 13%, driven by sellers on the 182-day bill. And of course, for the bond side of the market, things were really bearish, as average yields inched up some 50 basis points to 14.33%, owing to sell pressure on the February 2020 security that drove up the yield by some 193 basis points. That's at the short end of the curve. Well, the FMDQ exchange recently took up its current nomenclature and structure after some 25 shareholders gave their nods to the decision at the annual general meeting a few weeks ago. The new structure, which transitioned the OTC, which will be the over-the-counter functions of the platform, into a full-fledged exchange, also bettered a holding company structure that places the FMDQ Clear and FMDQ depository subsidiaries under the company. At a meeting held with the media yesterday, the chief executive, Mr. Bola Onadele Koko, gave some insight into the developments that led to this expansion and what investors should basically expect from the new structure.
The OTC market internationally had caused major problems for its lack of governance, lack of transparency, lack of valuation, and so many things that could go on listing. And the market thought that, Nigeria could get to this point someday, that the OTC market will become very big, it will be unregulated, it will not have standardization, governance will be low, and then we have crisis in the economy. Of course, the interconnectivity between markets and economic progress and things like that. And that was what motivated the setup of FMDQ, pretty much, to look at that OTC market. But in dealing with the global financial crisis, the G20 also considered so many things that should happen in ensuring the OTC market would not cause that sort of problem in future. And they agreed on a couple of things that should occur. The OTC market should have better transparency and governance, and then there should be clearing arrangements in the OTC market, which will end issues of lack of documentation and so many things. Of course, they also talked about trade repositories, so there could be records of transactions that, do take place in the OTC market. In the United States, they approach things also by putting Dodd-Frank Act in place, which some of you would have read, of course. And Europe, as they were then, before the issue of Brexit, we all understood they were very strong on regulation because they had structures to deal with such. And the European Union had regulation to deal with so many things in the OTC market, including how those transactions actually took place and how those products were sold, so many things. What happened in Nigeria, because we understood the challenges we have with legislation in Nigeria. I don't know if some of you have been involved in trying to get a new bill or a bill passed into law here. It's a major stressful exercise. We also recognize that regulation at times may not have the sort of sustainability that you require. And to the wisdom of the central bank and the bankers committee then, in actual fact, FMDQ was set up. In setting up FMDQ, it was to organize the OTC market. That was a simple registration. But as we brought on the team to implement the FMDQ project, it became obvious to us that in the Nigerian market, a lot more needed to be done beyond just sitting to have governance over the OTC market. And as some of you will remember, very quickly we saw that there was opportunity in offering a different and the very efficient listing service in the market, but we restricted ourselves to the fixed income market. And if you've interacted with the market today, they would tell you a lot of the footprints and the changes that have occurred motivated by FMDQ in the debt capital market space. Today, in the past listing process that will have taken 3 months and would have cost 0.15% of the value being listed, today you get it for much lower, and you can even get it in 24-48 hours. So if you look at the Nigerian market and the economy, we quickly again saw that our role could not be limited to organizing the OTC market, because we achieved this area very, very quickly with the support of the stakeholders the SEC, and the central bank, the DMO, Debt Management Office. We were able to quickly organize the OTC market. So we redefined our strategic role. When you operate in a developing market like Nigeria, you have to do a lot more in developing the markets. So we defined for ourselves 4 major roles, strategic roles. Yes, we have to organize the market, and I'm going to come back to that. That's where I'm going to end the pitch. But we thought it was important that we work with government and regulators, because capital markets or understanding of financial markets, most of us might not have very good understanding of the touch points. And again, if you're preaching what the regulators or government, what they do not understand, you may not achieve much success. So we realized we needed to become partners with the regulators and government. There was a time that the market was also very complicated in terms of foreign exchange. We saw that we needed to become the marketing face for Nigeria. It was the most difficult period. Going abroad to talk to them, because they are also stakeholders to this market, to talk to them about the sort of foreign exchange market we had and giving them hope that we're going to have a better market. That was a very difficult period. But we had to take on that role because nobody was marketing the Nigerian financial markets. Not so many people actually market Nigeria as a destination for investment. But we had to take on that role when we had the FX crisis. Today, we receive a lot of foreign portfolio investors. When they come to Nigeria, they would like to come to FMDQ to engage with us. Because when we visited them during those difficult times, we spoke the truth about the situation in the country. And we gave them hope that things will happen. And they can see that things had happened. And we told them we're partnering with the regulators and government to ensure success and the sort of market they were used to. Of course, we haven't stopped. Now, in a country like Nigeria, with the infrastructure deficit we have, with the challenges in housing, infrastructure, and so many areas, sustainability, we had to also take on the role to be catalyst for infrastructure development in Nigeria. Of course, of late, if you've been reading some of our interviews or narratives, you will see that we're very strong on prosperity for the Nigerian government, for the Nigerian corporates, and for Nigerians. And that's where we're going to put a lot of energy and investment as we develop. So to put things in context, the total non-federal government bonds in Nigeria is not up to 1 trillion. In a country with this sort of opportunities and potentials, in most countries, the percentage of the debt to GDP is 3 digits. In Nigeria, in terms of percentage, it is in single digit. So we've not done enough penetration and leveraging of the potentials of the Nigerian economy. So there's still a lot of work to do on that debt capital market side. But we can't grow that debt capital market side if we do not privatize, if we do not drive infrastructure from private capital perspective, if we do not change the commanding heights we're used to in Nigeria. So I go back to what we started with, which is the 4th strategic role, and that is market organizing. In organizing that market, we saw the fragmentation that occurred with financial market infrastructure. Financial market infrastructure in the IOSCO parlance will be your clearinghouse, will be your settlement platforms. In some literature, they include exchanges. Payment system is also part of it, and trade repository. So we inherited a market, or we came into a market in Nigeria where the platform of the exchange will stand on its own, and then someone else operates the settlement, and there was no clearinghouse as we have it today in FMDQ Clear. Of course, we engaged widely, and we thought the best thing to offer to this country at the moment is a vertically integrated financial market infrastructure group. where once you touch the exchange in terms of listing all transactions in the secondary market, you have straight through processing and standards across the infrastructure. You trade on the exchange, you execute your trade, the clearing will take place in the clearinghouse, and the assets will settle in FMDQ depository.
Well, the show is all about regulators and, of course, state governments this evening. Ekiti State government, of course, becomes the first state to make market briefing at the Nigerian Stock Exchange. Find out what investment opportunity is in the southwest state for you after this short break.